Good morning and welcome to Market Cafe with me, Lisa Fernandez, and with me is Snehi Shah. Very good morning to you, Snehi. Yes, and during the course of the next 1 hour, we take you through all the actions transpiring both on the international as well as the domestic front. But first, let's move on to the international market that Snehi has tracked very closely. Snehi, it looks like the global market, they have hit a pause button on the late 2023 rally.
Absolutely, Lisa. So you're absolutely correct when you say that. Good morning to you and a very good morning to all our viewers as well. Let's look at the global handover and let's start by looking at the US markets first. Now, when it comes to Wall Street, stock futures ticked down Monday night after the major averages took a break from their latest hot streak. Now, during regular trading yesterday, the Nasdaq fell 0.8% as tech companies fell across the board. You had Nvidia and Intel that declined 2.7 and 3.2% respectively. So you had that weighing on Nasdaq. Alphabet also nearly shed 2%, while Meta shares lost 1.5% as well. Now this pullback came on the back of 5 consecutive positive weeks for the 3 major averages. The S&P 500 also slipped 0.5% and Dow was nominally down just 0.1%. Meanwhile, all the action was happening in the small cap stocks because they have outperformed the rest of the market, with the Russell 2000 posting a 1% gain. The small cap index has enjoyed a nearly 7% gain over the past month, and they're raising hopes of a broadening market rally. Traders have become confident that the Fed Reserve will begin to cut rates next year in spite of the recent hawkish commentary that we saw from the central bank. Now, when it comes to bond yields, the 10-year US Treasury yield advanced on Monday. The yield on the 10-year Treasury was over 3 bips higher at 4.259%. The 2-year Treasury yield was last at 4.60% after rising by more than 6 bips. Slight uptick coming in when it comes to both of those bonds as well. And while the Fed is currently in a blackout period, meaning there will be limited comments from the central bank's officials, Wall Street has more to look forward to when it comes to the economic front. Then traders will be looking forward to the latest job openings and labor turnover report this morning in American time, so Tuesday morning American time as well. So well, that's the handover coming in from the US. Rather weak, we could say, but all the pressure building up on the Nasdaq. With that, let's shift focus to European markets as well. And European markets were mostly lower on Monday too, amid an apparent pause in the recent global rally as traders bet on interest rate cuts from major central banks in 2024. Now, the Pan-European Stock 600 index provisionally closed with a downtick of 0.1%. Mining stocks were the ones under pressure. They were down 2.4%. They led the losses when it comes to the European markets. Energy stocks too dropped 1.6%. You had the CAC and FTSE down 0.2%, and DAX was very marginally in the green. So well, this is the handover when it comes globally, and US and Europe seeing slight bit of a pressure on their indices as well. But Lisa, take us through what oil and other commodities, especially gold, because we saw gold touching record high levels yesterday.
Shining and sparkling.
Absolutely, and then it did slip a little bit as well. So tell us more about it.
Right. So talking about the oil prices, the volatility continues. Oil prices it declined. It saw some declines, and that was pressured by the investor skepticism over the latest OPEC Plus decision on supply cuts. Remember, it was last week, and there's some uncertainty about how the producers may implement it. And also there's some uncertainty surrounding the global fuel demand, though the risk of the supply disruptions from the Middle East conflict, that remains limited, and that has limited the losses too. So sluggish global manufacturing activity, that also weighed on the prices, and the latest data that implies strong economic headwinds that reinforces concerns about the oil demand growth going forward. But talking about gold, gold was sparkling and it hit a record high. It has risen for the 2 consecutive months, with the Israel-Hamas conflict boosting demand for the safe haven asset, and expectations for the interest rate cuts that has provided further support. So yes, we can see the gold prices. If I talk about the gold price, though it touched a 2100 per ounce, it's now at around $2,055 per ounce, and it has erased off some gains. So yes, it's and even analysts are saying that there is further room for the gold prices to rise further. So I think it's time to stock on the gold. And gold can be called girls' new best friend after diamonds.
Well, Lisa, that is debatable because, diamonds will forever be up there. But let's see how this pans out for gold and other commodities as well. But let's keep it with commodities. And the Saudi energy minister has gone ahead and said that the production cuts from OPEC Plus can absolutely move beyond Q1. However, he also added that they are seeing signs of demand improvement. Meanwhile, he also added that they did not support any declaration at the COP28 that calls for phasing out of fossil fuels.
And moving on to some global stories, Israel has ramped up attacks across the Gaza Strip, including around the hospitals and even in the south of besieged enclave. The Palestine Red Crescent says that it has lost contact with the teams after telecommunication services were cut off in Gaza amidst the intensified Israeli bombings. The death toll is 16,000. Meanwhile, leaders from across the globe are condemning the intensity with which the Israeli forces are carrying out the offensive in the region. Now, dozens of families are now seeking shelter in northern Gaza hospitals, and unfortunately, there is no sign of easing from the Israeli end. The defense minister has affirmed that the attacks on Gaza's southern end that will surpass the northern operations.
Well, that's some somber news coming in from Gaza, but let's shift focus. And music streaming platform Spotify shares popped in Monday's session after the company announced that it will be laying off 17% of its total workforce in a bid to cutting costs and amping up profitability of the company. The announced layoffs reportedly amount to 1,500 jobs.
Right, and meanwhile, the crypto rally that's seeing no respite, the world's largest crypto asset, Bitcoin surged as much as 5%, hitting a 19-month high. Bitcoin topped that $41,000 mark, the highest level in more than a year. And that rally was largely bolstered by the anticipation of the Bitcoin ETF approval, coupled with bets on the US interest rate cuts.
Well, and shifting focus back home then, severe cyclonic storm Michong-induced heavy rainfall continues to wreak havoc in Tamil Nadu. At least 6 casualties have been reported so far due to the cyclone. The state capital Chennai and adjoining areas have witnessed non-stop rains. In response, the government has declared a public holiday today in several districts of Tamil Nadu. The cyclone is expected to make landfall on the Andhra coast today. Now, earlier Times Network's Shreya Dhondial spoke to the Met Department's DG Mohapatra, who is predicting devastation in coastal Andhra when the cyclone makes its landfall. Listen into a snippet of that conversation.
First, as we speak, there are very heavy rains that have lashed the city of Chennai. They still continue. Can I ask you for how long these rains will continue and if the intensity will increase or decrease over the next 12 to 14 hours?
Yeah, today is the most intense rainfall day for Chennai and some of the north coastal districts of Tamil Nadu, like Kanchipuram, Tiruvallur, and Chennai urban and urban areas. So it is mainly because of this tropical cyclone, which is severe cyclone storm, which was located about 90 kilometers away from Chennai at the noon. And now it is moving away from Chennai, moving towards Andhra Pradesh coast. So therefore, gradually intensity of rainfall will decrease. Whatever it may be, today we can expect heavy to very heavy rainfall. From tomorrow, rainfall activity will be drastically reduced for Chennai and the north coastal districts. But for Andhra Pradesh, rainfall activity has commenced. During past 24 hours also, there has been extremely heavy rainfall activity over south coastal district of Andhra Pradesh, mainly Chittoor, Tirupati, Nellore and Prakasam districts. And rainfall activity will gradually increase there today, and tomorrow also it will continue over the south coastal Andhra Pradesh district, starting from Nellore up to Krishna and West Godavari district. There could be exceptionally heavy rainfall also over the south coastal Andhra Pradesh tomorrow, and activity of rainfall will increase gradually as cyclone is moving towards coastal Andhra Pradesh. Cyclone will make landfall tomorrow in the forenoon between Nellore and Machilipatnam, nearby to Bapatla.
And staying with the topic, Foxconn as well as Pegatron have reportedly halted the production of iPhones at their Chennai facilities, and this is due to the heavy rains. So according to reports, Foxconn, which employed around 35,000 people at its Tamil Nadu factory, is yet to decide when to resume the operations.
All right, with that, let's slip into a very short break on this edition of Market Cafe. But when we return, we'll take stock of how the Asian market... Hi there, welcome back. Thanks so much for staying tuned to Market Cafe. This is ET Now. Let's talk about an ET Now exclusive now, because a thumping victory in the state elections, the BJP-led government at the centre may give income tax relief in the interim budget. ET Now has learned from sources that discussions in the Finance Ministry have begun to give relief to taxpayers before the 2024 parliamentary elections. Prakash Priyadarshi has more details on this. Prakash, take it away.
Yes, we are learning from our sources that the government is likely to provide some relief to the taxpayers in direct taxes under new tax regime. However, government will table interim budget this time, but the sources are saying that the proposal to provide further relaxation under new tax regime could be made. We are given to understand that these efforts are being made to make new tax structure more attractive going forward. As you are aware that the government had in last budget made some changes in new tax structure, and the similar kind of proposal could be made this time again. In addition to that, sources are also saying that a tax exemption limit under new tax structure could be increased to rupees 3.5 to 4 lakh. Discussion underway, but the sources are saying that it is at a very initial stage and final decision could be taken closer to the budget.
Thank you, Prakash, for sharing that exclusive. Indeed, a good news for the taxpayers. But troubles are mounting for Byju's, because NCLT has issued notice to Byju's after BCCI has dragged the edtech giant to the court over alleged non-payment of dues to the tune of around 158 crore. And Ankur Mishra is joining in with more details on this. Ankur?
Yes, NCLT has set in the order that there is a notice which needs to be served to Byju's. Now, this is as per the insolvency petition which has been filed by BCCI against Byju's, and the claimed amount is 158 crore. Now, this amount is not that important, but the process is more important, because once this insolvency petition is initiated, it also gives chance to other lenders to go for similar kind of unpaid dues. Remember, there were other lenders as well who were in discussion with Byju's over non-payment of dues, and all those discussions were continuing. Now, this petition is important under Section 9, because if this is admitted, there will be insolvency proceedings which will be initiated against BCCI. In fact, in the petition itself, it has been revealed that there was a notice which was served in the month of January, and those dues have not been cleared yet, and hence BCCI has moved NCLT for recovering that amount. So all in all, it all depends on NCLT what kind of direction they give further, but for now a notice has been served to Byju's.
All right, thanks Ankur for all of those details. Let's shift focus to another ET Now exclusive, and we learn from sources that manufacturing firms are pitching with the government to extend a lower corporate tax rate applicable to them that lapses on the 31st of March 2024. ET Now learns from sources that these companies have asked the Finance Ministry to extend the 15% tax rate until the March of 2026. Bhavya Dua has more details on this. Bhavya.
Right, so the manufacturing companies are seeking an extension to the sunset clause for the 15% concessional corporate tax rate, which lapses on 31st of March 2024. The industry is pitching with the Finance Ministry for an extension until March of 2026 amid the recent incentives by the government to boost Make in India in manufacturing. Section 115 BAB of the Income Tax Act provides for an option of concessional rate of taxation at the rate of 15% for new domestic manufacturing companies. While reducing the corporate tax rate in September 2019, the government had said that any new domestic company incorporated on or after 1st of October 2019 making fresh investment in manufacturing will have an option to pay income tax at the rate of 15% if they commence their production on or before 31st of March 2023. Now, the budget of 2022-23 presented on 1st of February this year had proposed that the concessional 15% corporate tax rate would be available for one more year till March of 2024 for newly incorporated manufacturing units. The new domestic manufacturing industry has been a major beneficiary of government incentives under the PLI, and performance-linked incentives provide benefits for firms meeting certain criteria. These SOPs are related to applicant firms meeting government criteria about the local manufacturing.
Well, thank you, Bhavya, for sharing that exclusive on manufacturing companies' low tax rates extension. But it's a reigning exclusive because another exclusive coming in on Paytm, as it is planning to onboard as many as 10 million of its merchants onto the ONDC platform, and this is by the end of 2025. So speaking exclusively to ET now at the launch of ONDC's Build for Bharat initiative, ONDC's T. Koshi as well as Paytm's Vijay Shekhar Sharma spoke about how the platform will change the face of e-commerce. Listen in.
We are in a country who is stimulating entrepreneurship. We have entrepreneurs in small towns, villages, and big cities and everywhere. As of now, the digital commerce is all about merchants from big cities selling to the consumers from big cities. So I don't think there is nothing called a next phase to jump out from what we started, but to expand and enable this large network. And then my ultimate dream, which I always say, is that every product or service which is catalogable will be in this network. And diverse kind of buying applications like what you're seeing in Paytm will come and help their buyers to buy what is relevant. So it's not just the goods, not just good services, mobility, financial services, and also many building blocks, whether warehousing as a service, whether logistics as a service, whether packaging as a service, whether cataloging as a service. So what we are trying to do is to stimulate action in each of them.
I want to get a perspective from you on scaling up as well. I think we've seen discounts coming in from food delivery startups, and I mean better than those on food delivery startups on ONDC, and I think it was trending for the right reasons as well. But one point on scaling up as well.
So the beauty of ONDC is that no single person need to do the cashback or discounts, and there was no discount that was funded by the platform or players. I would rather say that it is actually the seller who has obligation to create more delivery channel, more customer acquisition channel, who was funding for it. So it was a SKU price itself, the very particular SKU which was priced at a discount, and that is, I think, is the reason that we also believe that this open network will work out, because I mean, if you look at food itself as a category, there is a seller who wants to bring more number of customers and they want to bring the value, so they will find out the ways to discount, and that's what will scale. If you notice, the food delivery service or grocery services are in certain geography out there, while the platform and network will allow them to go to even far and wide and increase the TAM for the industry.
Well, an IIFL Samasta, a resilient microfinancier with 12,000 crore rupees in assets, remained unaffected by the recent RBI circular on unsecured lending. Well, that's the word coming in from Venkatesh N, who's the MD and CEO of IIFL Samasta Finance. Listen into what he had to say.
We are an NBFC MFI. For us, still microfinance still is a very important part of the lending part from the banks. So we are not going to be affected by much of this.
So are you on track with a target of 1 lakh crores of AUM?
Yeah, I mean, with aspect to IIFL Samasta, we are already at around 12,000 odd crores. We are looking at closing in on close to around 15,000 odd crores as we get to the financial year end. We are on target with that, and our offtake during the festival is normally on a little thing. This festival season was also slightly up more than the previous years. We saw a little more uptake.
So as we can see, your loan book was 79% secured. Are you moving towards the secured loan book only? What are your anticipations?
See, if you look at IIFL Samasta per se, 85% of our book is microfinance loans. And we have 15%, we have diversified into other asset classes. We do micro lab.
So in the second quarter of fiscal year 24, the return on assets was 3.7%. Will it be reaching 4% at the end of the fiscal year?
Yeah, I mean, if you look at ROA for IIFL Samasta Finance Limited, we were at around 4% and we see that our margins and our ROA constantly increasing as we go on.
Just witness the NST and the rates, everything. How are the proceeds going further? What are your plans for the proceeds which you're doing, the NCD?
We see that increasing a stronger footprint in the geographies we already operate, and we add in lot more customers. We already manage close to around 2.7 million customers. We see that going to close to around 3 million customers as we reach this financial year end.
Well, that was the outlook shared by the management on IFL Samasta Finance. But moving on, let's listen in to market veteran Madhu Kela as he talks about how the PSUs will lead the market rally, whether there is any room for further rally considering the elections and also considering how PSUs have rallied this year.
I think public sector as a whole, there is a lot of potential. I'm sure we have spoken in your channel only a lot of times. They seem clearly the leader of this bull run or this leg of the bull run. You know, there is 30 lakh crore rupees or more wealth which has got created in public sector companies, all put together in last 3 years. Like, so some sector may consolidate because of the very steep price hike or very steep price hike in certain stocks. But I think there is a lot of value still in public sector companies, and you have to choose the right stock to be able to make money. And given that, you know, given that market is feeling there is certainty about the continuation of the same government, then you can imagine, you know, what will happen in the next 5 years. There could be possibility of large scale disinvestment happen in the next term of this government. And if you consider all of that, and if you consider that the valuations are not yet anywhere expensive or euphoric in a lot of these companies, I would say stock specific is still money to be made in public sector companies.
All right, that's the word coming in from Madhu Kela. We'll listen into more of what he had to tell us later in the day as well. But it's time for a breather on this edition of Market Cafe. You don't go anywhere. We'll be right back with more stock-specific news.
Welcome back to the show and thank you for staying tuned in. And this is the part of the show where we take you through the sectors, the stocks that can be in action today. And for that, we have Ashesha to take us through all the stocks. Good morning, Ashesha. Take us through all the stocks that can be potential buzzers today.
Well, yes, good morning. First up, let's talk about Honasa Consumer, where reports suggest that a block deal is expected to happen today. PE investor, a Fireside Venture, may sell about 1.9% stake in the company via block deals worth about 230 odd crores. Floor price has been fixed in the range of 368 to 384 rupees per share, indicating up to 4% discount as compared to yesterday's closing price. So on account of this block deal that could probably happen today, this counter will be in focus. Let's also talk about M&M Financial Services. Operational data for the month of November is out and it is rather mixed. Overall disbursements stood at 5,300 crores, which is an uptick of about 16% on a year-on-year basis. But at the same time, collection efficiency has deteriorated to about 94% versus 96% on a year-on-year basis. So it was reported rather mixed set of operational data for the month of November. Meanwhile, HCL Tech will also be in focus, and that is because State Street will acquire HCL's UK's 49% stake in the joint venture for about $170 million US, and State Street will continue to be one of HCL Tech's strategic and among top 15 clients. So on the back of this transaction that has happened, HCL Tech will be in focus today. Let's also talk about Jupiter Wagons, and this is on the back of their fundraising plans, where the company yesterday informed the exchanges that they've completed 403 crore QIP, fundraise via QIP. Key buyers in this QIP include Society Generale, HSBC Mutual Fund, Bandhan Mutual Fund. Max Financial Services, meanwhile, will also be in focus, and that is because the chairman, Analjit Singh, has stepped down from the board, and Rajiv Anand will succeed him, chairman of the company. So some management rejig happening over here, because of which Max Financial Services will also be in focus. Let's also put the spotlight on JSW Infra, where the company said that they will be acquiring stake in PNP Port at an enterprise value of about 700 crores. And lastly, IEX, on the back of their operational data for the month of November, and IEX operational data was also mixed, where volumes are up 13% on a year-on-year basis in the month of November, but average clearing price has declined by about 13% at 4 rupees per unit. So on the back of operational data, which was rather mixed, IEX will also be in focus today. Ashesha, thanks so much for taking us through a list of all the counters that could be potential buzzers in today's trading session. But stay on with us and let's shift focus to the retail space, because channel checks suggest that travel and wedding related inquiries will help the industry performance in the quarters to come. So Ashesha, tell us more about what's happening and what sense are you making of this? Well, yes, antique channel checks, retail channel checks suggest that demand did pick up in the festive season, but it was tad below what the street was working with. They say that we did see a K-shaped recovery in the festive season, but the momentum after the festive season did not sustain. They say retail industry's performance will of course depend on how travel and wedding season expenditures roll out in the month of December and January, but the industry is quite optimistic with respect to recovery in the months of December and January. They've also spoken about company-wise performance, where they say that Trent emerges as the clear outperformer driven by Zudio expansion. They also say that Keval Kiran Ramani continued to witness healthy profitable growth in the quarter gone by. As far as Aditya Birla Fashion and Retail is concerned, performance was rather muted. This was on account of growth moderation and increased debt, because of which growth for Aditya Birla Fashion and Retail was rather muted in the festive season. As far as V-Mart is concerned over here, it continued to witness sequential recovery as far as its demand is concerned. But they say that divergence in fashion retailers' performance that has been seen in the past continues to sustain in this festive season as well. Let's also understand why they say that. They say Westside is expected to report high single-digit L2L growth in the third quarter, with Shoppers Stop, which is expected to report mid-single-digit value growth in the third quarter. So yes, all in all, demand did pick up in the festive season, but the momentum did not sustain, and hence industry is optimistic about demand recovery in the months of December and January.
Thank you, Ashesha, for that. So retail stocks will be in focus on the back of the channel check, but let's shift focus and look at some of the brokerage calls on M&M Finance. Morgan Stanley has maintained an equal weight stance on the stock, while Jefferies has maintained a hold. And Vamakshi is here with more details from the notes along with the latest business updates. Good morning, Vamakshi. Take us through that.
Well, yes, M&M Financial is in focus today on the back of its business update for the month of November. Now, overall, when we look at the update, loan traction has been a tad bit slower, but the asset quality remains range-bound for M&M Financials. Now, let's look at the specific numbers then. Disbursements stood at 5,300 odd crores in the month of November. This is an uptick of almost 1% on a month-on-month basis, but a much higher uptick of almost 17.8% on a year-on-year basis. Now, disbursements have definitely grown on a soft base because there was an absence of the festive season in November 2022. When we look at the October plus November cumulative disbursements, they've actually shown a growth rate of almost 8% on a year-on-year basis, and this in turn is a bit of a slowdown as compared to 13% year-on-year growth that we've seen in disbursements in the second quarter. Not just that, when we talk about the AUM, that has inched closer to the 1 lakh crore mark. AUM now stands at 96,600 odd crores, an uptick of almost 27% is what we're noting on a year-on-year basis, while on a month-on-month basis, AUM has been largely flat, just up almost 1%. Consequently, when we look at the AUM growth, that has actually moderated to around 26% on a year-on-year basis as compared to 30% that we saw in the month of October. Now, when we talk about the collection efficiency, it stands at almost 94%. Generally, the trend is that collection efficiency in the third quarter picks up, but this time around that has not actually gone through, because the collection efficiency as compared to November 2022 has actually seen a dip of almost 200 basis points. When we talk about the brokerages, we have a couple of takes coming in from Morgan Stanley as well as Jefferies. Morgan Stanley highlights that the numbers that came in from Mahindra Financial Services were quite sluggish. Downside risks are seen to their forecast. Apart from that, Jefferies believes that the loan growth was healthy, but the asset quality was range-bound, and they believe that the valuations for this counter appear to be reasonable. So on the back of that, Morgan Stanley has maintained its equal weight rating on M&M Financials, while Jefferies has maintained its hold call.
All right, Vamakshi, thanks for that. M&M Finance will be in focus on the back of that. Well, we have flights cancelled, trains disrupted, crocodiles on the roads, and dozens of cars being swept away. This is what Chennai has witnessed in the last few days, and this is nothing short of a catastrophe as Cyclone Nichong nears the northern Tamil Nadu coast. Several areas of Chennai were left inundated due to the heavy rainfall and waterlogging. So far, the cyclone has left 5 people dead and a public holiday has been declared in Chennai. The IMD has predicted heavy rainfall in Chennai and its surrounding areas. But which are the companies that are set to be most affected by the storm? Sharat takes us through that list. Sharat, take it away.
Well, yes, in focus we are having that important cyclone which is the Michuang, which has affected Tamil Nadu initially, and we have culled out a list. Now do remember, these list of shares is not completely exhaustive, but first let's pick up the BFSI space, especially Muthoot Finance as well as Manappuram Finance, where roughly 10 to 20% of their branches are located in the state of Tamil Nadu as well as in Pondicherry. Importantly, if you look at it, there are other financials also which would be in focus, which are having exposure, especially the names such as Jana Small Finance Bank, City Union Bank, Karur Vyasa Bank, Lakshmi Vilas Bank, and even Sundaram Group of companies. Apart from the BFSI segment, there are certain infra projects also which are in focus. ITD cementation, if you talk about, they are having the Chennai Metro, while Vatek Vabag is also having an important desalinization project in the Chennai region. In the cement companies, if we talk about it, we are having names such as India Cements and Ramco Cements having a strong presence in Tamil Nadu. And if you look at the consumption specific names in the listed space, we are having Dodla Dairy, V-Guard, Hatsun Agro, SKM Eggs, and even Seshai Paper. Now there are other stocks also where the impact might be less, but we can see a lot of announcements are coming as the closure of factories are happening, SEZs are being closed down, and over here there are certain companies which would be on your radar. They should be Aban Shar Offshore, Chennai Petro, Carborundum Universal, Kaplan Point Labs, Rane Group, Wheels India, Orchid Pharma, and even bigger names such as Titan and TTK Prestige. But of course, this is a very developing situation and companies have not actually announced what the impact has come yet. And we have just given a list of the companies with the exposure in Tamil Nadu.
Thank you, Sharad, for taking us through those companies that have been affected by, that can be affected by the cyclone, and we'll wait for the company update. But now shifting focus on the MPC meet that will start from tomorrow. Morgan Stanley has come up with a note and they have said that MPC will keep the rates on policy. They will keep the rates on hold and the policy will remain unchanged, and they expect the rates to be on hold in FY24 as well. So they expect a shallow rate cut cycle from June 2024 and also expect RBI to lift FY24 growth estimates from 6.5% and the growth estimates at 6.9% for the estimated FY24 and 6.5% for FY25 estimated. Now inflation is likely to tick in November, led by the onion prices, and RBI is likely to keep its FY24 CPI estimate at 5.4%.
We're also getting a note this morning from Kotak India on the valuation practices in the market, and they're seeing several flaws in the valuation practices prevalent on the street. The flaws are along the lines of exaggerated fair value of stocks and understated potential risks. Kotak is also seeing disconnect between valuation approaches and business models, along with an inordinate focus on near-term earnings. Now, these practices, they say, have persisted for a long time, resulting in a mistaken orthodoxy about valuations in the Indian markets.
And as BJP's clean sweep in the Hindi heartland boost market sentiments, what can we expect going ahead? Is 21,000 on the Nifty coming soon? Year out what Purunju Belliard, the MD as well as portfolio manager of Equity Intelligence India, had to say on this.
Some 8% or 10% rally in Nifty and Sensex, it's not a big thing, to be very frank. More important, now all investors are looking towards, at least we had a tremendous rally, which has gone much beyond the Sensex and Nifty. If you see the number of smaller companies in mid caps and small caps in India, they are also a very important part of the economy and the market. And the valuation gap was very huge. Now in the last 3 years, this valuation gap between the small caps, mid caps and the large caps, that valuation gap has come down. So there is no excitement overall. Investors are more worried about, whether we can sustain this 3 years bull market, what has been happening. It is definitely unprecedented bull market. There is no doubt about it. Because it is sustaining. Earlier also we used to have such sharp movement in 92, Ashad Mehta time or the late 90s or all those things. But this time it has been a sustainable bull market. Many at a times people thought markets will crash and crash. A lot of people were there talking like that, but it never happened. It has been giving corrections occasionally, and that's a very much part of this. Otherwise, I think markets have been very different. See, it is supported by Indian economy outlook and the growth. India presents an unparalleled long-term opportunity for equity investors today.
In the overall scheme of things, how you look at your portfolio post the election verdict and in the run up to the election cycle, the central election cycle, could you be looking at some tactical changes? Maybe go overweight on defense more, maybe go overweight on railways more, because if this is a vote for continuation, then defense, railways come back in PSUs, that trade may just extend itself. Pranju?
Yes, Nikhil, this is a very, very important question and important point to be thought. That defense, railways, that kind of make in India strategies by the current regime, it will now continue, it's almost sure. So that is going to create a lot of wealth in that segment for investing community. So some of those stocks we may feel is overpriced, the way a Mazagon stock moved from 180 to, such kind of multi-bagger levels.
Well, that's the word coming in from Puranju Velia. We also have a long list of prominent market voices lined up for you on the market today. So while Lisa and I bid you goodbye, you stay tuned to the channel. The market takes all the action here.